Good morning, everyone, and welcome to another edition of Friar Financial's Financial Forum. Hope everyone had a great fourth, stayed cool, and all that good stuff. But yeah, exciting week this week. We're going to kick off our series on pre-retirees and retirees and the concerns that we see from a lot of our clients. So 8 major concerns that we will delve down into over the next 8 weeks. Today we'll give you a preview of what that looks like. But without further ado, we'll get right started with get right into markets in motion. So in this week's Markets in Motion, markets posted strong gains during this shortened trading week as investors responded positively to the continued diplomatic developments in the Middle East and remained focused on the outlook for interest rates and economic growth. So for the week, the S&P 500 gained 1.77%, the NASDAQ Composite advanced 2.12%, and the Dow Jones Industrial Average climbed 1.97%, rose 1.81%. So this did end up Q2 and it ended with some fireworks. So stocks started the week on a positive note following weekend news involving the United States and Iran, helping extend market momentum from the end of the second quarter. The rally broadened early in the week with semiconductors and technology shares leading the way. By the close of Tuesday, the Nasdaq had surged more than 3.5% for the week, while the S&P 500 was up roughly 2. Then as July began, can't believe we're saying that, but as July began, however, market leadership shifted. Investors rotated out of some artificial intelligence and technology names and into other sectors of the market. For instance, the Dow Jones Industrial Average reached a new intraday high before easing back slightly. So while both the S&P 500 and Nasdaq moved lower during the session, gains in several mega cap technology companies help limit that pullback some. Now, on the final day of trading before the holiday weekend, stocks initially moved higher after June's jobs reports came in well below expectations, prompting investors to reassess the path of future interest rates. As the day progressed, trading became more mixed as investors headed into the long weekend. By the week's end, the Dow Industrials finished at a record high. And again, as we mentioned, the job market shows some signs of cooling. So that economic data that was released during the week suggests a slowing labor market. The economy added 57,000 jobs in June, well below economists' expectations of 115,000 jobs. The June figure also fell short of May's gain of 129,000 jobs, indicating that hiring momentum may be moderated. And just I'm going to jump off base for a minute here, but yeah, we're seeing that kind of locally here. And the concern is in healthcare. So, for instance, the Cape Fear healthcare system let go of 200 jobs last week. So, when you start to see things in healthcare, that gives us another clue that the job market is really slowing down. So, investors continue to watch the labor market data very closely, as those signs of a cooling employment growth could influence the future Federal Reserve decision on interest rates. So, looking ahead with our key economic reports this week, Monday, we've got the 3-month Treasury bill auction, a lot of Treasury bill auctions this week. Tuesday, the International Trade in Goods and Service Report. Wednesday, we get the June Fed meeting minutes and consumer credit data. Thursday, we get weekly jobless claims, existing home sales data, and the Federal Reserve balance sheet report. And that will do it for this week's Markets in Motion. And I will turn it over to Jeffrey to begin our Finance in Focus this week.
Hi, good afternoon, and welcome to Finance in Focus. So this week we're focused on two major things shaping markets right now. And that's the AI investment boom and the retail investor story. So AI boom continues to drive corporate growth. And the artificial intelligence story remains one of the biggest forces in global markets. South Korea's SK Hynix is reportedly pursuing a NASDAQ listing that could value the company at nearly $29 billion. And this is giving investors greater access to one of the world's leading AI memory suppliers. Meanwhile, Samsung Electronics, a familiar name, is expected to report an approximately 18-fold increase in second quarter operating profit, driven largely by strong demand for high bandwidth memory chips used in AI applications. Taken together, these developments suggest that spending on AI hardware remains robust and continues to benefit companies across the semiconductor and technology ecosystem, which is big. So what that means for clients is AI has remained more than just a market narrative. It's increasingly an earnings story. While valuations in some technology companies are elevated, the continued strength across chips, infrastructure, and hardware suppliers suggests that AI retail growth is broadening beyond just a handful of mega cap names. For investors, the diversification within the AI ecosystem may become just as important as simply owning the most recognizable companies. So that we also got some new opportunities emerging. So beyond traditional business lines, companies are finding new ways to monetize their platforms. Walmart continues to build its advertising operation, and it's increasingly being viewed as a major digital advertising competitor, which is not how we usually view Walmart, but that's what the shift is a part of. So some analysts believe that the retailer could eventually generate more advertising revenue than many smaller social media platforms. And at the same time, Wall Street banks are seeing improved performance in China. Trading activity has surged, helping major U.S. bank subsidiaries generate record profits during 2025. Now, not every consumer story is moving higher, however. Lululemon is beginning to see signs of slowing growth in China, a market that has helped offset challenges elsewhere. So, what this means for our clients is investors should continue looking beyond headlines revenue, behind the headline revenue growth, and focus on companies that are generating profits. Businesses that successfully create high margin revenue streams, such as advertising, subscription, or data driven services, often improve profitability and resilience over time. So the retail investor story isn't slowing down though. And finally, one of the most important market things of 2025 continues to be the strength of the retail investor. According to Citadel, May and June established new monthly highs for retail trading activity. Trading volume from individual investors was 65% above the previous 2025 levels and more than double the average level seen in 2024. What makes this noteworthy is that retail participation no longer appears to be a temporary post-pandemic phenomenon. Instead, active individual investors have become a permanent and increasingly influential force in the market price discovery. So this means increased retail participation can create both opportunities and risk. Remember that risk part too. Greater liquidity is generally positive, but crowds can also amplify short term moves, especially around popular stocks and themes. And the environment reinforces the value of maintaining a long term investment plan and focusing on fundamentals rather than reacting to daily market swings. The bottom line is that the dominant themes remain in place. AI investment continues to accelerate. Corporate confidence appears to be improving through increased deal activity, and economic growth is slowing but remains positive across much of the developed world. So, for clients, the key takeaway is that the broad market leadership is expanding beyond a narrow group of winners. While volatility is likely to remain elevated, due to geopolitical developments and active retail trading, the underlying backdrop of our earnings growth, innovation, and corporate investment continue to support a constructive long-term outlook, which is important. And that's it for this week's Finance in Focus. And now sending back to Marcus for this week's Wealth Wisdom Workshop.
Thanks, Jeffrey. That was a lot of great information there to kind of keep going with the retail, the economy, and what we've got going on right now.
Hmm.
It's starting to look a little bit better, but still having to do some things on our end to counteract other things. Specifically, I'll say the mega caps and
Hmm.
that Mag Seven, and trying to take some of the weight off of what they're doing. All right, so this week's Wealth Wisdom Workshop, the 8 financial concerns keeping retirees and pre-retirees up at night. So over the next 8 weeks, we're going to explore some of the most important financial challenges facing today's retirees and those approaching retirement. Retirement has changed dramatically. People are living longer, healthcare costs continue to rise, tax laws are becoming more complex, markets remain quite volatile, and many retirees are relying on their own savings more than any previous generation.
The reality is that retirement planning today is no longer about simply accumulating assets. It's about creating a strategy that can withstand decades of uncertainty while also maintaining the lifestyle you've worked so hard to achieve. Over the next 8 weeks, we'll take a deep dive into 8 core concerns that can impact financial security throughout retirement. These topics are based on the most common questions and concerns we hear from retirees and pre retirees every day.
So, concern number one, inflation, and we call that the silent threat. So, our first topic will be inflation. Many people think of inflation as an inconvenience at the grocery store or gas pump, But for retirees, inflation can be one of the greatest threats to long term purchasing power. A retirement that lasts 25 to 35 years may experience multiple periods where the cost of living doubles, creating significant pressure on income and savings. We'll discuss how inflation impacts retirement income and what strategies may help protect purchasing power over time. Concern number two is that taxes don't retire when you do. And we've kind of talked about that one before. Many people assume they'll be in a lower tax bracket once they stop working. Unfortunately, retirement often introduces new tax challenges through required minimum distributions, Social Security taxation, Medicare premium surcharges, and taxable withdrawals from retirement accounts. We'll explain where these hidden tax traps exist and why tax planning may be just as important as investment planning in retirement.
And so, concern number three, will your money last as long as you do? Thanks to advances in healthcare and healthcare lifestyles, retirees are living longer than ever. While longevity is certainly a blessing, it also means your retirement savings may need to generate income for 25, 30, or even 35 years. Living longer increases exposure to inflation, healthcare costs, taxes, and market volatility. We'll discuss how to build a retirement income strategy designed for a potentially lengthy retirement. Concern number four, market volatility in retirement. Market swings can feel different when you're retired. During your working years, downturns may present opportunities to continue investing. In retirement, however, you're often withdrawing money from your portfolio at the very time markets be declining. We'll explore why volatility carries greater risk in retirement and how retirees can think differently about income and asset allocation.
And that leads right into concern number five, which is sequence of returns risk. This is one of the least understood but most important retirement risk. Sequence of returns risk refers to the damage that occurs when poor market performance happens early in retirement while withdrawals are being taken. Two retirees can earn the same average return over time and experience dramatically different outcomes based solely on the order in which those returns occur. We'll show why timing matters and how retirement plans can be stress tested against this risk. Concern number six is Social Security uncertainty. And for many retirees, Social Security serves as the foundation of retirement income. However, questions remain about the program's long term funding and what future changes could mean for retirees and pre retirees. Potential adjustments to benefits, taxation, retirement ages, or cost of living adjustments could affect retirement income for millions of Americans. We'll discuss what retirees need to understand and how to plan regardless of future legislative changes.
hmm And then, so concern number seven, that's these rising healthcare costs. So, healthcare is one of the few retirement expenses that is virtually guaranteed and historically rises faster than general inflation. From Medicare premiums and prescription drugs to out of pocket costs, healthcare expenses can place growing pressure on retirement income throughout your later years. We'll examine the potential impact healthcare costs can have on a retirement plan and strategies for prepping ahead of time, which is important. So, and then concern number eight, the financial impact of long term care. Finally, we'll address one of the most overlooked retirement risks, and that's long term care. Statistics indicate that many retirees will require some form of long term care during their lifetime, whether care is provided at home, in assisted living, memory care, or a nursing facility. The cost can be substantial and potentially disruptive to a family's financial plan. We'll discuss why planning for long term care is about more than finances. It's about protecting independence, preserving dignity, and then safeguarding our loved ones. So,
Absolutely. So, what is this series really about? While these eight concerns are different, they all share one thing in common: they are interconnected. Inflation affects taxes, taxes affect income, income affects healthcare, healthcare affects longevity, longevity increases exposure to market risk, and market risk can impact every aspect of a retirement plan.
over the next 8 weeks, we'll break down each of these topics one at a time, explain the risks, discuss common misconceptions, and explore practical planning considerations that can help retirees and pre retirees make informed decisions. Because retirement isn't simply about reaching a number, it's about creating a plan that can adapt to life's uncertainties while helping you maintain confidence in your financial future. So, with that being said, thank you for joining us with this edition of the Wealth Wisdom Workshop. We look forward to seeing you next week as we begin our first topic, inflation, the silent threat to retirement income. So, everybody have a good week and thank you as usual.